I remember clearly when I first got to the IMB model and I was coming out of the big banks. And the year before, I had done over $300 million worth of production. So I had done a lot of loans. And I remember I had this deal and we were trying to put it through JP Morgan or Chase. I forget which one it was. And the underwriter comes back and says, yeah, we're not going to be able to do this. I was like, why? And they told me something about the way they were calculating the income. And I said, great, just go for an exception. Here are your five compensating factors. Call them for an exception. And the underwriter at the IMB said, there's no exceptions here. What do you do? It doesn't fit to the guidelines. Go back to the pricing engine and find someone who will do it. I remember going, wait, when I was at a big bank, I could get this done by exception. Now as an IMB, I can't. But then rolling over to the platform we're on now, like really opened my eyes to where all the gold really sits in the broker model. So what was that like for you? Because you and I spoke and it was a very big transition for you.
Well, I had a lot of fear about it. I was very comfortable on the correspondent side with rate. There was a lot of things that were going well for me, but you almost had to drag me by the hair over to the broker side. It's been about a year, about 13 or 14 months. Maybe I wasn't ready previous to that time, but and I wish I had made the move sooner. I really, really like not having to ask for permission when I want to price aggressively. And I say this often, I almost never say no. I always have an opportunity to help just about anyone when I've never really had that strength, that superpower before. It's not as if, and I say this before when we had the crash and what was it, '09 and 10, I used to say if I put a mirror under your nose and it steamed up, I give you $1 million. Those days are gone, and it's a good thing. People really do need to qualify in some manner. There's none, 100% financing, stated income, 1% start rate, option arm. That stuff was shame on the industry and shame on the consumer for gobbling that stuff up. It was not a stable environment for lending. If somebody's self-employed and they write off a lot of their income like so many do, we have vehicles for them. Look, if I can demonstrate that you've got this cash flow and you've got these assets that I can utilize, there's options for you and you're not a risk. You've got, a stable position to lend upon and you get to buy a house or refinance your house or buy an investment property. It's nice to have access to.